Good day, traders. I want us to take a quick look at Euro AUD trade setup that I have. I normally start my analysis from monthly to weekly to daily as my direction time frame, and I look for my entry in intraday time frame, like 4 hours, 1 hour, 30 minutes, and 50 minutes. So I want to look at the direction of this pair. If you look at it from monthly time frame, you will see that this market massively make a move down, make a three-wave structure to the upside to about 78% retracement. Of course, you see this corrective structure at the middle is zigzag, and then after you expect this move to the downside to break this low. That is our thought from a monthly perspective. Then from weekly, you can see that even though we are bearish on the monthly, it cannot just go in a straight line. It has to make an impulse, make a correction, make an impulse, see an impulse, correction, impulse, correction, impulse. Then it has to correct before it make another leg lower. So right now, we are still bearish in weekly time frame, but there are still some corrective structure that is yet to complete. Of course, you can see that this latest move to the downside is being corrected to about 50 to 61.8, about 50% retracement right here, 50% retracement. After that, you see this massive daily, weekly engulfing candlestick pattern that actually break this structure. It will break this structure to the downside. So everything we are seeing here is a weekly correction for another leg lower. We are going through a weekly correction to have another leg lower. So if you take a fib of this impulse right here on this weekly time frame, you can see that it's sitting right at 61.8. But what I want you to know is that, as we will see when we get to daily time frame, you see a market that is consolidating at 61.8, where you expect it to move down to the downside. Is just giving you a message that is still about to break to the upside before moving down, probably to hit 78% fib level before it goes down. So let's see, the story is painting for us on a daily time frame. Of course, as I told you from beginning, monthly, weekly, daily, they are good for direction, while you use your intraday time frame like H4, 1 hour and 30 minutes or 15 minutes for your entry. Right here, if you look at it, you remember this was the fib we took in weekly, okay, and we are hitting exactly 61.8 of that retracement. But there's something that's very important here. Of course, you know, we use ELLIOTT wave theory, demand and supply, and liquidity as our strategy, the core of our strategy. And right here, you see this retracement hitting this level. You see the market reacted this way, okay, reacted this way, okay. All these areas you see, guys, they are pool of liquidity on top. And even when you look at this level to this level, you can see that they are equal high. Market will not market will not find it easy to drop down at that same level. Market would like to make a corrective structure here, break through this equal high, okay, before making a move down, correction, and a move down. This is how market like to move, guys. And of course, by the time this break to the upside here, it will have made the 78% retracement of this massive move before we see another leg lower. All right. So now, what do we expect to see if we go to the 4 hours time frame? All right. Go to 4 hours time frame, you will see that if this market has picked enough order for it to make a move to the downside from here, it should have gone since. It shouldn't be consolidating at the level it is right now. But right now you can see that it's consolidating. So what does that mean, and how do we interpret that consolidation? You can see that right from here, it kept making a higher high, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, okay, higher high, it has not broken the low. Okay, so we expect this to make another higher high. Okay, why should we just expect this to make another higher high? Okay, are we just just for the sake of making a higher high, or what do we see? You can see from the top here, there is no liquidity taken right here. The market has not grabbed any liquidity. Let me show you an example of what I mean. Can you see example here? Can you see consolidation here? Do you see market move to the upside and immediately flows down? This is what is called grab of liquidity. That is a sign that the market is about to go lower. Do you see similar scenario here? No. That's to tell you that what we saw here, you move to the upside, we are still expecting it to happen right here. Okay, we want you to break this top before coming lower. And if you see the market, you see the market consolidating here. Do you see this move to the downside? Massive move to the downside, and then that move was immediately retraced back. This is example of liquidity grab. Okay, that means we are not expecting the market, we're not expecting price to come down to this level again, because it has come, take liquidity, and immediately move to the upside. So whenever you have a structure like this, guys, let me just do a quick schematic of what I mean. Whenever you have this kind of structure, you have the market breaking down to the downside, tap liquidity, and immediately move to the upside to break market structure. Okay, once it breaks down market structure, all you need to expect, guys, is a retracement of this move that break market structure. Okay, expect it to retrace to 50 to 61.8 and take your trade to the upside, targeting this fib level. All right, so that's just how the market works, guys. So I have to show you here. You see, if you have to take it to another level, guys, you want to see the kind of volume that is injected in this move down and the volume that is injected in the market in this move up. And if you look at it, if I put in my volume profile, you can see that when this pair was coming down, there was a lot of volume in the market. And when this one was going up, there were a lot of volume. Okay, volume came in for a sell and big volume came in immediately for a buy. That is a confirmation of liquidity, guys. All right. So right now, let me hide the volume. Okay. So now you have a break of market structure here already. So you have liquidity tapped, sell side liquidity tapped. So you have higher high form. So all we need to do, guys, is to take a fib of this level and target a move, a correction back to where? To 50 or 61.8. Okay, so I'm expecting a correction back to 50 or 61.8. There, from there, I will take a buy to the upside. So if I extend my fib, let me just do it for you. Okay, so right here, I have this setup here. Okay, I want to take a long here, and my stop loss will be just few pips below 78% retracement, and then my TP is going to be at minus 0.618. All right, minus 0.618 right here. But since it's very close to the sub-psychological level of 1.5050, right now it's 1.5047. So I want to extend it to 1.5050. Okay, that's my TP, guys. Right here. That's my TP. So that's it, guys. So and I have to confirm if there is going to be expectation of injection from institutional perspective on this pair. So I want to open this right here. Want to see, log into institutional order from COT report. Which see COT report for Euro. You can see is the last one that was released on the 19th of September. It was, the net position was positive 33%, and you can see the long 31% and the short 26%. So Euro is expected to be bullish. And then let's see AUD right here. You can see the next position is negative. So, and you can see short, those that were shorting the position on the short of AUD is 52%, and that for the long is 25%. So AUD is expected to be weak, and then Euro is expected to be bullish. So based on that, it's perfectly in line with this analysis that we're expecting some move to the upside for Euro AUD. So that's it, guys. So if you like this setup and if you like to monitor it and you like more of it to come, subscribe and like the analysis. Okay, see you next time. Bye.